Inflation came out at 7% over the past year. That's its highest since 1982, and the stock market turned itself to the upside. Why is that? Well, it was in line with the forecast. No surprises there, folks. Actually, the New York Stock Exchange hit a closing all-time high. I'm surprised because I haven't seen anybody really actually talk about this. But it closed at an all-time high. Here are some of the stocks, you can screenshot this if you want, that also hit new yearly highs, new 52-week highs that are part of the New York Stock Exchange composite. What you'll notice there is a lot of banks and a lot of energy stocks. Looks like Santa's still in town, but he's leaving coal behind. Look at coal. Woo! Up 5.14% today, and it's up roughly about 11% year to date. Now, one thing before we get into the main episode, you'll see here on the NASDAQ composite hitting all-time highs. We're doing so on weakening internals. That is the advanced decline line, and it is a negative divergence. Also on the NIMO, the Nisey-McClellan oscillator, a negative divergence. You're watching the Stock Market Brief Show. My name is Michael Silva. I got Coco on my lap hanging out with me. Today's date is 1/12/22. This is the show we use technical analysis and intermarket analysis to get a good idea as to where the stock market might be headed next. Let's get into today's show. Welcome back, everybody. So, what took place today with the CPI data launching? The big mover was in the dollar breaking down from this fairly important area of support, and as soon as it cracked, it really did flush down, and it potentially has the room to flush down further, potentially into 94.5. That helped the S&P 500. You can see down here when this falls, that can go up. There has been that correlation, but the more important correlation to watch while the dollar is dropping is, holy moly, look at gold, up 0.5%. So it's been rocketing there for about 4 days straight with higher closes. Silver was up 1.73%. So silver had a very significant move. Oil also very significant move, up 1.75%. And it's just been on a monster tear coming up into its prior area of resistance here. So we'll see if it starts to bump its head very shortly. But that's not all, okay? The dollar fell, and look at copper, up 3.3% on the day, breaking out of this base on some monster volume. That is a very large move here, and if we're looking at this in terms of a potential flag, and we're breaking out, that can come target 475 to these previous swing highs over here. Big things taking place in the markets. What happened to yields? Yields slightly down on the day, other than the 2-year kind of uptick, which made the spread between the 10 and 2 come down a little bit. The 30 and 5 spread remained relatively flat. So not much going on there. You can see the 10 yield did back off slightly here, but you got to wonder, has this just been on a monster tear and that's all the pullback's going to be, or maybe a little bit more, and then it's going to continue to rip up? That's always a possibility, and we need to be prepared for something like that, because if that is the case, that means the 10-year yield, the TLT, we're looking at treasury bonds, could come down, and that can apply more pressure to technology stocks, and we already know how important technology stocks are to the S&P 500, to the NASDAQ 100, and so forth. What do I want to call out here? Well, we have a little bit of a piercing dark cloud coverage type candle where we gapped up. It looked pretty strong, but we reversed and closed at the low of the day. So that's something to pay attention to. Me personally, I am in a position of TLT. I've moved my stop loss now to break even. So if I'm stopped out, it's a break even trade, but it is something that I am still in at this particular point in time. Now, if this starts backing off and the 10-year yield starts moving back up, let's pay attention to the Fang Stocks. Mang Stocks now. Facebook's now Meta. I don't know. There's all kinds of weird acronyms out there. But let's take a look at the relative strength for the Fang Man. So they're all, Facebook over SPY. So which one's performing from a relative standpoint? When the line goes up, that means it's outperforming the SPY. And what you can see here on the chart is pretty much all of them. 1, 2, 3, 4, 5, 6. Yeah, 6 out of these 7 are below the 50-period moving average on the relative strength line and been heading pretty lower, other than a few turn-ups right here, so that's pretty good. but that means, they've just been performing pretty weak, and you can see that in the indices, how they've been just chopping back and forth. So what do we got to watch for? Well, first off, Apple would be the one, if you're looking to play pullbacks and or trade it from a long perspective. Apple is the one that has been outperforming the S&P 500, so that is one to definitely keep an eye on. But the big names that have been they haven't even been touched for an entire year, basically. Pretty much no selling taking place. And that's Google and Microsoft. Those are going to be the two big monsters that you want to really keep an eye on moving forward. Obviously, they have gigantic market caps just like Apple, but you want to just keep a close eye from an absolute perspective on those, because if they do start turning down, those one will hold a lot of weight in the NASDAQ 100 and S&P 500. So if those unwind, you can definitely see the S&P 500 struggle to hold up too as well. So let's take a look at Google. First off, nice big gap up. So anybody looking at this, yay, it's up 1.21% on the day. But let's take note where this price action is. A very strong move to the downside. Okay, think of a rubber band stretching down, and then it snaps back. And if you really look at this, where did it snap back to? Right into the middle of the range that it's been in. So it's a mean reversion trade. That's why we always say go long at the bottom end, sell into the middle, go short at the top end, and then sell back into the middle. And if you can withstand the volatility in between to try to catch the whole entire move, cool, good stuff. Now the candle here itself is below the 100-day, declining 20 and a 50-day moving average, and it's a little bit of a shooting star type candle. So what do we watch for tomorrow? Potentially a gap fill if this wants to come off, and if the 10-year yield wants to rise a little bit. But, it's still too early to tell at this particular point in time. We need some consolidation. We need the price to stop going back and forth all crazy like this before to find just a better trade setup. And so as it stands right now, being in the middle of the range, it's really hard to determine. Here's Microsoft. It hasn't traded into the middle of the range yet, so it could potentially head up a little bit higher, but you can see here that's actually a red candle body. It is above the 100-day moving average, so that is actually a more positive sign. But it is still below the 50 and declining 20-day moving average. So if this one starts to get up a little bit more, start looking up here at this range at around 330 to bump its head. But as it stands right now, shooting star type candle, as it recouped that's a good sign that it recouped it, but we need to see some follow through. Keep an eye on volume too as these continue on. Yeah, so you can see this one right here. So big move to the downside on inclining volume. And then you could see this move to the upside. It's been declining volume. So 3 days. So so this day and then this day and this day. So a couple of days of declining volume. So as this heads higher on declining volume, what you need to watch out for is a potential break to the downside on increasing volume. If that's the case, not good at all. How did the indices perform? How did the sectors perform? Let's take a look at the sectors first. Mixed bag across the board. Okay, materials up the highest, 1%. Down there towards the bottom is some defensives, consumer staples, and healthcare. Let's see what the market does with this inflation news, see how it digests. I believe Powell's talking tomorrow. I don't know for what, but I'm pretty sure he's going to be in the spotlight tomorrow for something, from what I heard. I don't have it in front of me, though, so don't quote me on it. Sheesh. So yeah, mixed bag in the 11 sectors that make up in the S&P 500. Overall here, too, relatively flat, very boring, low volume day. Okay, so if you were trading intraday, it was great right out of the gates, right? Boom! But then all of a sudden it was kind of like, and then it came up a little bit, It was one of those type of days, which, makes sense, and I'll tell you why when we hop into the indices, which is right now. This is the chart that we posted yesterday of the S&P 500, the SPY, and it was pricing in this move. The options market said, hey, we expect with tomorrow's data to drop, the SPY is going to be probably moving around plus or minus $3.69. Okay, and we drew that out right here, $3.69. So where did we go? What do you know? Bam, we landed right here at the top of the range. Almost tagged it perfectly, but then we came off. Now, if you take a look at this from this perspective on a daily time frame, that right there is a high wave, doji, spinning top. There's all kinds of names. It doesn't matter, but basically this shows a lot of indecision and uncertainty. However, from a bullish perspective, it reclaimed those moving averages, so that is a positive sign. So if the bears want to do anything about this, they're going to have to do it soon. Now, the move came down on explosive volume, okay? And now on this couple-day rally right here, we're seeing the volume decline off. Okay, so if we start to see this come off, and we've been talking about this on previous briefs, We said it comes down if it starts flagging, and it's doing so on declining volume. If we start breaking and we see higher volume, be careful. All right. So as it stands right now, can we reach further? Yeah, we can absolutely reach further. We are right around the upper range of where the options market price in for the week as well. So, just be mindful of that. I wouldn't be too shocked to not see much more movement actually this week. So, we'll see what plays out. Let's look at the 15-minute time frame. We've been watching that 61.8% retracement level. We gapped through that. Go figure. The options market always does things like that. Or not the options market, the futures market always does things like that. When we come into an area of resistance, the cash market can't do it. So the overnight session just takes us right over it. Well, it went over it. It brought us into that overextended territory. You can see we rolled itself over and we finished where? Right at that 61% retracement level. Okay. So, the bulls and the bears have a tough decision to make here, right? It's going to be a fight to see who takes over. And it's going to be a pretty decisive day tomorrow, I would imagine. And as you can see right now, on a good note, we are back above that 5-day moving average. And also from another good note, this could be a bull pennant that's forming. You can see a big pull to the upside, big pennant. So this could, explode us up and try to take us back up to this volume shelf profile, which we already discussed is a very big possibility. So 477, 460, 476 to 477, that kind of range up there could be a measured move of this little triangle. So we'll be keeping an eye on that. Now, if it starts breaking down, just keep an eye on that 5-day moving average going into tomorrow, and you want to see that start to curl up and hold as support. That would obviously be more positive. Take a look at the VIX. The VIX got crushed down to the downside today, down 4.29%. All right. You can see here now the Bollinger Bands once again. They're starting to contract. Okay, contraction leads to expansion. We talked about that here. We talked about that here. Okay, contraction leads to expansion. All right, so once this doodles around here for a little bit longer and gets really tight, if that's the case, just be on the lookout for a potential explosive type move that can be, to the upside or to the downside. We do not know yet. Okay, but I will say that it is back below this area. It held as resistance now. So this 18.5 just above that has been clearly just a very important level here as it's been acted as support and resistance multiple times. So we'll continue to keep an eye on that level going forward. If we take a look at the Qs, this is the chart that we posted the other day, right? So the other day we posted this and we said, wow, okay, it's actually expecting a lot bigger move in the tech market in the Qs than it was the SPY. Okay, and check this out. What did the options market do? It priced it perfectly. It came right to that upper range. It acted as resistance and then started selling off and came right back up. And it did so on pretty weak volume. All right, so where's all the retail traders at? Where are they hiding? All right, so you can see here just declining volume as the price is moving up, and it tagged that upper range. So this is, do we see some big surprise happen? Nope. This was all predicted here by the options market. It was 100% accurate. The 50-day moving average below the 20-day moving average. It's back above the 100-day moving average. The PPO is starting to flatten out to try to curl up, so that's a positive sign. But as it stands right now, you just need to be on high alert because obviously this thing can still go anywhere at this particular point in time. That 390 level is the one that we're keeping a very close eye on. And it has a very similar type candle, an indecision type candle, like we saw on the SPY. Also to note too, just look at the range of these candles. You can see that the ranges it's starting to small. The range and the body. The body's starting to get narrow, and that can signal slowing momentum. As you can see, we hit into this area of resistance. Now, if you take a look at the 15-minute time frame, very similar type thing. We're back above the 5-day moving average. That's positive, and we're forming this triangle right here. We came up to around that 61.8% retracement level, but we didn't quite reach it, but we did get to that 390 level. So what do we need to see? We need to see this break out and start heading up, obviously, if you're long, but just be mindful that, there's a strong possibility that we can come back and retest some of these levels, try to retest this 5-day moving average, right? It's always better if this thing comes, just doodles around longer. If this doodles around longer and just stays here, that means the 5-day moving average can stay like this and start curling up, and it just sets it up for a better move to potentially break out of some sort of pivot area coming forward. Now, sorry, my dog's barking. Coca Loca. NASDAQ 100% of stocks above the 50-day and the 200-day moving average. We talked about it. We're down here, down here, down here, down here. That's typically marked short-term bottoms, and you can see here, bam, we started bouncing, but we just don't know how high that bounce could potentially go. But you can see it's working off those overextended levels. Meanwhile, you can see that bounce has been taking place, but the internals on this bounce are just, the breadth is really, really weak. And then you can see over here on the BPNDX chart still says that there could be potentially more room to go as it stands now, as we're bouncing from that positive divergence that we recently discussed. Another thing that's not the greatest look on this is you can see the EMAs, the 21 and the 50 on the advanced decline line of the NASDAQ advanced decline line. They're pointing down and they're well below zero. You need these above zero and pointing up to really feel a lot more confident in the marketplace. But it's just not there right now. So we'll be keeping an eye on it. The last one I want to talk about is the IWM. This one priced in a pretty large move too as well yesterday. And where did it end up hitting? Well, it ended up hitting the lower range. Okay, but we also, from this bounce, we put in a higher high and a higher low. So that's good overall, but you can see it came down to the lower range. It did not tag the top like the other indices did. And as it stands right now, too, about matching type volume, and the candle itself, not that great looking, as it gapped up and then it closed more than halfway through the previous trading day's candle. That's, a dark cloud coverage type candle. It's a reversal type candle. We'll see if it has any follow through to it though. You need to see the follow through, right? And that goes with all the indices here. So for example, this is not the greatest looking candle, but you need to get follow through, get below that 385. But, also we'd still be coming right into a 100-day moving average. Okay, so just because it's just one single day, it doesn't mean that anything crazy is going to be happening. Same thing goes with the S&P 500. You need follow through to the downside. All right, let's go into the 15-minute time frame for the IWM. This one obviously doesn't look nearly as good. It came up to around the 50% retracement level. What I want to call out here is that this area of resistance, so this little downsloping trend line, maybe keep an eye on that for a potential break of, but we'll see if it can get there. As you can see, we gapped up, a lot of selling right out of the gate, and then it just rode that 5-day declining moving average. So in order for this to start turning around, we need to get back up. We need the 5-day moving average to start curling itself to flat to go positive. But as it stands right now, it's just not there, as the IWM has just been in this monster trading range, just jumping back and forth, from high to low and then back into the middle of the chart, which it just recently did. All right, let's talk about some crypto here before we wrap up the show. The Sailor to Shift ratio still turning up right there. Saw a nice little day, all that positive divergence. It hasn't crossed above that zero line yet, but it's something that we are still monitoring every single day. If we take a look at the price of Bitcoin, still below the relative strength line and the EMA 50 when we compare it to the S&P 500. And it's still below the 200-day, 50-day, which is declining, and 20-day declining moving average there too as well. But we did see a nice little pop to the upside. It's getting to that 44,000. I think that we have a definite chance to come into 4,600. But, if we get a very strong move like this into 4,600, it's very typical to see it back off a little bit. So we'll keep an eye. We'll see here how this develops. But as it stands right now, it's trying to make a little bit of a pop. We'll see if that can hold. Ethereum came right into the 200-day moving average. We'll see also if that can hold. The 200-day is still inclining, so that's positive. It's below that the 50-period EMA. And looking at the relative strength line between Ethereum and the S&P 500, it's still below declining 50 and 20 and 50-day moving average there too as well. So seeing a little bit of life come into the market, but we don't know yet if this is like, wee, and then it's game time and the game is on. We do not know yet. We've seen multiple times where it went, wee, and then it sold off, wee, and then it sold off, wee, and then it sold off, wee, sold off, wee, and so forth. Okay, so we don't know if this is going to be a wee sell-off. We don't know yet. All right, let's wrap this all together. I want to show you just a couple more charts as we conclude this episode. First and foremost is I want to go back to the weekly range that the options market priced in, where 68 to 70% of the time the price ends up landing within this range. And now where we are right now in the Qs, we tag the upper range of it. So it's always possible that we stretch out. But remember, like around 70% of the time, right, it'll close and it'll come back within. So we are already, come Wednesday, right, tomorrow's Thursday, so we have 2 more trading days left in this market. So if the market wants to come down further, it has that opportunity to do so. And that would probably present itself a lot of fear in the markets because that's a pretty large move, a large range there. However, price currently is in its happy place, so I wouldn't be also too shocked to see price do not much at all. You need to be careful, okay? You need to be very careful, and I say this all the time because volatility is still here. It's still being priced into the markets. And the big thing that I'm paying attention to here is just how the price action, how the candle turned out. If we start getting below that 385, right, that's a confirmation move of this kind of just doji indecision, potential star type candle. So we just be very careful there because if it does close below there and we start to see that increasing volume, that could be not the greatest sign for tech. And if that does happen, I would expect obviously the 10-year yield to be back to start rising again, and I'd see the Treasury bond, the TLT, start to back off. The last one is the SPY. The SPY has not hit the upper range at this particular point in time. It has hit right around the lower range. We're starting to see a bounce, and now 475 is around the higher range. So keep in mind, there's still a large range of possibilities to happen in just 2 trading days. And as it stands right now, like we've said, the bulls are back in control above these key moving averages. But that type of candle, as we started to move up on that low volume, just be very careful if we start getting below it, and start to see increase of volume. It could be just, a reversion to the mean, and we're going to continue to see this wacky chop back and forth until the bulls and or the bears make a decisive move. That's all I got for you, everybody. See you later.